Hello everyone. As we do at the beginning of each quarter, let's take a look at the main conclusions that can be extracted from our digital top-down methodology. Our methodology consists of evaluating the attractiveness of European equities based on 4 complementary pillars of analysis. The first pillar focuses on the economic momentum in Europe. Our proprietary indicator has been rising in Europe since the start of the year, despite the heavy international political backdrop, and is now close to all-time highs. The same cannot be said of the United States, where the Trump administration's first steps have weighed on sentiment. This momentum in favor of Europe should continue over the coming months. The second pillar deals with the ECB's monetary policy. Last June, the ECB initiated an accommodating monetary cycle, cutting its policy rates by 150 basis points in 9 months. This sustained pace is set to persist until the end of the second quarter, and will continue to favor the equity asset class, particularly small and mid-cap companies in Europe. The third pillar of our analysis covers valuations. The European equity market risk premium is close to the average observed since 2000, while the small and mid-cap segment is discounted by around 11% by historical standards. In this context, it would not be surprising to see a significant outperformance of the small and mid-cap segment in the second quarter, which would normalize the valuations of the various compartments of the European market in both absolute and relative terms. Finally, the fourth pillar considers the behavioral aspect. The rally observed in Europe since the beginning of the year led to a breakout at the top of the horizontal consolidation channel that had been in place since last May. New all-time highs could soon be set in Europe. Our economic momentum indicator continues to signal a favorable environment for the asset class. Monetary accommodation by the ECB, far more powerful than that anticipated for the Fed, is unlikely to falter. Valuations do not reveal any excesses or even a significant undervaluation of the small mid-cap and value segments, capable of supporting the relative performance expectations of active fund managers. All this is taking place in a momentum that remains bullish for European equity indices at this stage. That's all for today, and we look forward to seeing you at the start of the next quarter for another market review with Shaheen Capital.